So by the end of the day today, we are going to get a lot more information around the Fed, around Netflix earnings, and we are going to see if this rally can hold up. Now, there is a couple different things that are really time sensitive that we need to talk about here in this video, and that is why we are making this video earlier in the day, so you guys know this information and you can prepare for it. Now, I know everyone is wondering about Netflix earnings. We are also going to talk about my expectations for that, what it'll do for the markets, what it'll do for AMC, and for those of you guys that stay until the end of this video, we will be going over 2 specific trades that I made on Netflix and why I made them. And they're not actually on Netflix because Netflix is so expensive, but they will benefit from good earnings and potentially do bad from bad earnings. So it's a cheaper way, a much cheaper way to get exposure to Netflix earnings. So we are going to cover all of this information. Thank you guys for tuning in. And number one, congratulations for all of you guys that are still participating in the markets and being active out there, really going after, potentially trades that could make you a lot of money or just investing for the long term. A lot of people have since given up in 2022, and it is unfortunate. So congratulations to all of you guys. By the way, if you guys do want to come trade with me live in real time, link down below in the description of this video. So first and foremost, S&P 500 up about 1.84%. It's a pretty strong day across the board. Now, that is not what we are going to talk about here in this video, but why the markets are actually up today. It has nothing to do with the Fed. It has nothing to do with Netflix. It simply has to do with the Europe energy crisis. So this article says Russia nears gas shutdown in Europe as Germany rejects claims it can't fulfill contract. So a lot of the fear, and this is actually a very big deal for American markets as well, is that Russia was not going to turn on Nord Stream 1 pipeline and Europe would run out of gas. They would run out of energy. And people were saying, what kind of effects would that have on the global economy? Well, either way you want to chop it down on the chopping block, it would not be a good thing. You could have seen Europe drop, 20-30%. That would affect American markets in a very big way. So now that Germany, especially Germany, is coming out and saying that they will be fine and that they do expect a partial opening to that pipeline at the very least, well, that is putting off a lot of those fears about what could happen to Europe. Because like I said, Europe dropping 20-30% is going to have a big effect on the American stock market as well. So it's that plus the US dollar is actually starting to come down. If you guys don't watch me, you don't watch the channel, you might be, not in the loop with what is going on with the dollar. Essentially, the dollar itself, when it strengthens or weakens, strengthens meaning the dollar is going up, this chart is going up, weakening meaning the dollar is going down, that is a fear gauge of how fearful are worldwide investors, because when the dollar strengthens, global currencies are weakening. So that means people are selling global currencies and going into the US dollar. You can see this represented perfectly during the COVID crash. People flooded into the dollar, shot the dollar up. It went down as people were like, okay, emerging markets will be fine. Our wons, our yens, our euros, all these other currencies will be fine, right? And that's actually a bullish thing. When the dollar goes down, that is bullish, because if you are Apple, if you are Tesla, if you are Microsoft or IBM or any other company that does business around the world, and you're taking in foreign currencies and converting that to dollars, well, if the dollar is strengthening and it now takes, let's say, double the yen, double the won, double, these other foreign currencies to equal $1 US, well, when you convert that over, your earnings take a big hit. And that's why Microsoft lowered their guidance, and that was months ago. So imagine, what effects it would have now, right? The dollar has continued to strengthen. Well, it has come down. So that is a bullish thing for company earnings. That is bullish fundamentally. And those are really the 2 things that are helping to give us this price action that we are seeing here today in the markets. The most important thing, or two most important things, Netflix earnings and the Fed. Now, why I say this is actually important with the Fed, we have a blackout period because coming next week on Wednesday, you will get the Fed rate hike decision. And depending on what the Fed says more than anything, that will really determine how the markets are going to trade. If the Fed gives any indication at all, or they just outright, come out and say that they're going to stop raising rates or slow down raising rates coming after, this next upcoming week, well, the markets are going to absolutely rip off of that because the markets are forward looking. But on the flip side, if the Fed comes out and they say, yeah, guys, we are nowhere close to stopping raising rates, well, that is going to be a very negative thing. And we have this blackout period where we're not going to hear from any Fed speakers until Wednesday. Besides today, we have Fed Brainerd that speaks at 2:35 p.m. Depending on what she says, depending on what Fed Powell theoretically tells her to say, you're either going to solidify a 1% rate hike or solidify a 75 basis point rate hike. It might also give us clues to if the Fed wants to stop raising rates or continue to raise rates aggressively. It's going to be the last Fed speaker until the Fed meeting. So 2:35. Depending on what she says, really probably in an hour she will talk. From 2:35 to 3:35, that's when you will see a Fed response from the markets. That's where you will see the probability of a 1% rate hike either go down to 10% or 0%, or will go up to 80, 90%. It is actually up as well about 2% from yesterday until today. So you have a little bit higher of an odd of getting a 1% rate hike today than you did yesterday. And you're going to, like I said, solidify this or not by the end of the day. That's why this is really time sensitive. That's why the video is titled, Watch This Before the End of the Day, for this simple factor. Because of right now, we're not expecting a 1% rate hike, and that could flip, like I said, by the end of the day. So that will be very important. Obviously, next week on Wednesday, July 27th at 2 p.m., that's when you will get the Fed. That's when they will come out, raise rates, and you will get the Powell press conference. And that is where you could get a totally new market dynamic. You could go from the Fed, raising rates and 1% rate hikes at all of these meetings, getting super aggressive, to potentially the Fed not raising rates anymore, really slowing down, letting households adjust to higher interest rates and what policy changes they have already done. I could see that playing out. So I think that's why it's such a big deal to point this out to you guys as well. But besides the Fed, besides Fed Brainerd at 2:35, the other bit of information that is time sensitive is actually going to be Netflix earnings, because they will report at 4 p.m. or maybe it's 4:15. It can vary. I'm not sure if Netflix reports right at 4 or 4:15, but Netflix here in after hours, that's pretty much it. That's your main tech earnings for this earnings season, at least the start of it. And a lot of people are negative on Netflix. A lot of analysts, a lot of people are expecting bad earnings, which it's relative, right? Because a year ago, Netflix reporting these earnings, that's terrible. But Netflix also lost like almost 2 million subscribers, I believe it was, last earnings. So even if they were to lose a small amount, or give good guidance, or possibly have a net gain of subscribers, that could be very bullish. Long story short, when everyone is betting against a stock that has done this bad for this long, the last two earnings seasons have been absolutely terrible for Netflix, and we'll just look at the chart here, then it's something you probably don't want to bet against. You've seen two back-to-back bad earnings. The odds of them having another, 25% drop compared to a 25% rally are pretty low. So usually you want to take the opposite side, the opposite from what the markets are expecting, because I'll tell you right now, really good news is not priced into Netflix. People are not expecting that. So if it happens, it could be a big surprise to the upside. Whereas if bad news happens, well, we kind of expect bad things out of Netflix earnings. Now, I don't specifically like Netflix as a trade. We will talk about the trades that I am personally trading here after we talk about AMC. It will be the last thing that is said here in this video. A little bit of a golden nugget, or potentially something that could do very well for you guys that do stay to the end of this video, but obviously not a recommendation. But why Netflix is so important, because it will give us guidance to how the consumer is acting. It will also give us a little bit of guidance what to expect from other stocks that are in the streaming realm, that are subscription based. A lot of implications across the board for the stock market. So this could make for a really good day tomorrow or a really bad day tomorrow, depending solely on what Netflix reports. Now let's talk about AMC stock, because we have a lot of quote-unquote meme stocks that are doing well today, and AMC stock is now above $17 per share. We are seeing about a 3% rally for the day at $17.04 per share. It's been quite a while since we were at $17 per share. My price target by the end of this week was in between $18 and $20 per share, so we're getting close to there. We actually got rejected close to $18, specifically at $17.82 per share. And like I said, depending on what Netflix reports, it could be important for AMC as well, because they're kind of in the same realm, not exactly the same, right? But they're in the movie business nonetheless. So I think it will be important specifically for AMC more so than not. But we are really in a good situation on a technical basis, right? You guys already know the spiel. Once you break out past a resistance level, it turns into a support level, right? And that's exactly what happened. So worst case scenario, if things are bad tomorrow, then the 50-day moving average, or 100-day moving average, I should say, is going to be the level to watch. For downside, that is at $15.60 per share. But really, you know, we're pretty far off of our next resistance level. That is at around $20 per share, and the next moving average is 200. The 200-day moving average, that is up there at $22.44 per share. As far as the RSI, that is at 68.02, so not looking too bad there. And the MACD is bullish, but still has a lot of room to go more bullish before you get the people, you know, saying that the stock has to come down, that we've rallied too hard, too fast. That's obviously not the case, and I'm personally expecting to see a pretty big day. A 20, 30, 40, 50% day is definitely not off of the table in my personal opinion. Now let's go ahead and look at the Ortex data for AMC stock and the short interest as well as the cost to borrow rate. So the cost to borrow max is at 10.79, whereas the cost to borrow average is at 10.57, cost to borrow minimum at 9.97. So all of these are around that 10% mark, and that is showing you a lot of compression, right? So the cost to borrow rates are not really moving up, but they're definitely not moving down, and they're becoming closer together. So I think you will see a big boost to the cost to borrow max by this Friday, by the next couple of days, and after today, that's where you really could see the jump up in the cost to borrow rate, because AMC has been very, very bullish, and I do think people will start demanding more, money, more higher interest rate to lend out AMC stock. As far as the option activity, that is very exciting. You are seeing a lot of very positive options, positive order value for the day so far at 82%, 10 orders totaling $580.24 thousand. You can see some bigger orders as well, like a September 16th $15 call. They paid $4 in premium, so you break even of $19 per share. This order alone worth $232,000. For this expiration, 71.6% of the open interest is calls. For next week, 62.61% of the open interest is calls. On the broad markets over the next 2 weeks, it's not very bullish. July 29th for the S&P, only about 20% of the total option activity is calls. So a lot of negative positioning over the next couple of weeks for good reason. You have the Fed raising rates next Wednesday. Thursday, you have the GDP report, and just that whole next week, you have Apple, Google, Amazon, Microsoft, all of these trillion-dollar companies that by and large control the stock market. So there you have all of that. I think that is very, very bullish, I mean, in regards to AMC stock. Now, how I specifically plan to trade Netflix, and this is really a golden nugget for anyone that is watching this video until the end. I actually plan to play this two different ways. With Fubo, because Fubo subscription based, right, in the streaming realm, and it's very cheap. So what I did, and this is not a recommendation, do not suggest anyone does this. It's a bad idea, to be honest with you guys. But I went ahead and I bought 15 $3 calls that expire this Friday. I got them at 3 cents a piece. So I am up like 50% on this trade. Anyone that is in that trading community linked in the description is up about 50% on this trade. So what I would normally do is go pretty big with this trade and look to flip out and keep some contracts free. In this case, I'm just going to keep all the contracts because they're so cheap. I spent $45 on this trade. And essentially, Fubo can move really, really big. If Netflix has good earnings, I think all streaming stocks will do very well. But Netflix is so expensive, it's unreasonable to even try to play Netflix. You're better off going with a sympathy that can move very big as well. In this case, Fubo, $3, you're about 20 cents out of the money right now. So that means if you get a 14-15% move in Fubo over the next 3 trading days, you will go into the money, and then you're going to get dollar for dollar at that point. If Fubo theoretically went to $4 per share, well, 15 contracts, bought those at 3 cents, $45, you would make $1,500 on that trade. Not a bad risk to reward in my personal opinion. Also, Disney, for an example, Disney will move alongside with Netflix. I did go out to August 19th, and I bought 15 of the 120 calls. Now, this is about 20% out of the money currently, but it's only going for, $18 now. I bought 15 contracts, $17 a piece. Spent about $250, $280 on this whole position, but it's only about 20% out the money for $17, $18. Whereas Netflix, 20% out the money is still going to cost you $200-$300. Now, Disney, you also get more time, and Netflix, $200-$300 for a contract that expires this Friday for a 25% move. Absolutely insane premiums on Netflix. But with Disney, you can benefit from a move up. Obviously, Disney will have a very sharp reaction based off of Netflix earnings here in after hours, and it could see a very good or very bad day tomorrow. But with the August 19th, you will also be able to play Disney earnings off of the time, right? By August 19th, you will get Disney earnings as well. So you kind of get a 2-for-1, and the premiums look a lot better. So that's what I did. Netflix will be very important. Do not copy any of these trades. You will lose money, and that I make that a point to point out, even in the trading community. If you follow me, if you do the trades that I do, you'll probably lose money from time to time. Most certainly, you will lose money. So if you guys want to be a part of that community, link down below in the description. Like I said, not a recommendation, just throwing out ideas. If you are going to trade something like Netflix, instead of trading a bad trade, here is a trade idea that could be better, just fundamentally, just an overall better trade. Like I said, not a recommendation. Have to put that in here because option trading can be risky, and odds are you will lose all of your money. About 85% of options expire worthless. The ones that hit really big are even a smaller percentage of that. So that is pretty much it for this video. Let me know your thoughts on all of this information down below in the comment section. Like the video, subscribe to the channel, do what you guys want to do. I will see you in the next one.